Good morning, this is Sakis Paraskevov, Senior Fundamental Analyst at IronFX, bringing you the morning comment for the 15th of August. Japan's GDP data disappoint, but yen still strong. Japanese data released overnight showed that economic growth was flat in Q2 from 0.5% in Q1, missing the forecast of a slowdown to 0.2%. The softness in the report was owed mainly to foreign exports, perhaps due to a stronger yen this year, as well as weak capital expenditure throughout the quarter. These data suggest that overall output growth remains very sluggish in Japan, despite the extensive fiscal and monetary stimulus introduced in the recent past. In addition to the further slide of Japan's core inflation rate into the negative territory, this adds even more pressure on the Bank of Japan to expand its stimulus program in the foreseeable future, in an attempt to boost corporate investment and inflation. The bank meets again on the 21st of September, and as we approach that date, speculation for further easing could curb some of the yen's gains, as was the case in the latest Bank of Japan gathering. Elsewhere, the dollar came under renewed selling interest on Friday, following the release of the US retail sales for July. The headline rate remained flat from a revised 0.8% previously, below the consensus of a 0.4% slowdown. The core rate, which excludes automobile sales, came at minus 0.3%, a turnaround from a revised 0.9% in June, also missing expectations of a slowdown to 0.2%. Nevertheless, the greenback managed to pare its losses within the following hours against most of its major counterparts, buoyed mainly by rising stock markets, with JPY being the main exception. The next major release that may determine the currency's short-term bias is the release of the FOMC minutes from its July policy meeting due out on Wednesday. As for today, in a relatively light calendar session, the only noteworthy data we get are the US Empire State Manufacturing Index and the NAHB Housing Index, both for August. The forecast is for a marginal rise in both indices. Even though these are usually not major market movers, in a thin volume environment, they could be more than enough to trigger some market reaction. As for the rest of the week, on Tuesday, the Reserve Bank of Australia will release the minutes from its August policy meeting, where the bank reduced its benchmark interest rate by 25 basis points, stating that the prospects for growth and inflation will be improved by such a move. Given that officials did not include an easing bias in the meeting statement or any form of forward guidance on the rate outlook, we believe that these minutes will be critical with regards to market expectations for the RBA's rate path. From Germany, we get the ZUW survey for August, and also we get CPI data for July from both the UK and the US. On Wednesday, in the US, the FOMC will release the minutes from its July monetary policy meeting, where the committee remained on hold and noted that near-term risks to the economic outlook have diminished. The factors that led the committee to this conclusion are likely to attract market attention, as investors will try to gauge the timing of the next Fed rate move. In the UK, the employment report for June is coming out. Considering that these are pre-referendum data and that some July data are already out, we expect them to attract less attention than usual, as they may not reflect the current state of the labor market. On Thursday, Australia's unemployment rate for July is expected to have remained unchanged. From the UK, we get retail sales for July. Given that this will be the first official indicator of consumer demand following the referendum, we expect it to be the highlight of the day. The forecast is for retail sales to have remained relatively flat, and any deviation is likely to determine the short-term GDP demand. Finally, on Friday, we get Canada CPI data for July. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX, wishing you solid trading.